All right, good morning, everyone. Let's get going. All right, last night's markets in the U.S. were obviously closed because of the Martin Luther King Jr. holiday. Get that out of the way now. We can move on into some volatility hopefully today. Obviously yesterday was maybe less than average daily volume. We also maybe saw a little bit less volatility because there weren't the States wasn't there to lead it around and give us any moves. And Asia, we saw a nice follow through this morning. We saw Nikkei up nearly 2%. We saw Australia was kind of the laggard, just barely up on the session. And then we saw the Hang Seng, Shanghai, and Kospi all up as well. Shanghai had a nice, or a decent little bounce there after a huge down day yesterday. Kind of almost actually feeling a bit like a dead cat bounce. It was up about 2% at one point. Now it's only up about 0.5%. So I think that's a little bit of a disappointment. They did come out with some GDP and industrial production data today, which were both a little bit better than expected. They were the weakest ones in years, but like we said, better than expected. So I think it gives us a little bit of relief this morning. FTSE showing up maybe a little more than 0.5% on the opening call this morning, and I think that's probably due to a little bit of relief out of China. I would say that if the mining stocks get up too much early this morning, that might be worth a little bit of a fade. If we look here this morning, Rio Tinto also had fourth quarter production update. They came in light on iron ore. I think I don't know if they're intentionally cutting some of their iron ore output, maybe some of the more marginal stuff due to the fact that iron ore price has fallen so much. But that's a whole nother story. So maybe a little bit of a miss there. We also have the fourth quarter sales release out of Billiton that are coming out later this evening. So you could expect those two stocks to come under pressure. Maybe if they initially bounce, might be a decent little place to look to fade. All right, and then later in the States today, we've got Morgan Stanley and Johnson & Johnson, as well as IBM after hours. Market data, like we said, we had industrial production and GDP out of China, both a little bit better. We also had retail sales, which is also a better number. So Chinese giving us a little bit of relief, like we said. Then we've got German and PPI numbers coming out right at our opening bell at 9, and then we've got the ZEW survey at 12 o'clock today. Okay, getting into the maps. First thing that we are going to have a look at is, we've got the last chart I was going to look at. We'll go ahead and have a look at that. And that's Aspen. Pretty much anything to do with healthcare, pharmaceutical here, whatever, anything in that space has just been an absolute sitter on the long side. Every time they take out highs, you just buy the freaking thing. It's impossible to lose money in the stocks at the moment. Anyway, making a little triangle formation here, narrowing wedge, whatever you want to call it. Bottom line is, looks like it's getting ready to make a move one way or another, probably a 15-20 rand move one way or another. So watch that closely. Definitely could have a nice little pop if we get outside of that band. Another one is ShopRite. I know that we showed this yesterday. I just wanted to go back to it. I mean, I think that this thing kind of broke out yesterday. It's marginal maybe, but we did obviously break out to new recent highs. Almost highs for the going back for did break out to highs of the year, but we've kind of dropped just below that. But anyway, we've been consolidating right on this breakout above 172. Yesterday we finally turned higher. I think this thing definitely has some giddy up left in it. I was reading a report from Deutsche yesterday talking about the consumer gaining strength. Their call for GDP this year up 2.8 or 2.9%, and I think that this would be one of the bigger benefactors from this. I also think that these guys are getting a bit of the consumers getting a bit of a shot in the arm out of lower oil price. You might start to see a bit of a shift into some more of the stocks like this relative to some of the ones that have been in favor of late. All right, next one we'll look at is Grindrod. I did show this a few sessions ago. I just wanted to go back to it because the market's rallied. We've rallied to probably 1,000 points off the lows from when we were looking the other day. This thing's just kind of confirming its weakness, and to me, this is a huge, this is a real kind of worry for me in the market and what's going on. We got stock markets rallying, pretty much all the markets up at all-time highs, and you got stock like Grindrod that's pulled back, 30-40% from the highs, just kind of confirming its bearishness yesterday, closing at under $20. I think that this thing has significant downside still from here, maybe as much as 3.5 Rand. So just watch this closely. This could kind of be a real global indicator that's telling us that global economies are really under pressure. And we did get a revised global growth forecast out of the IMF overnight as well. All right, let's look at Impalas. You can see, and we talked about this one not too long ago either, and kind of how it's kind of making also a little bit of a narrowing wedge here, a little consolidation, and we had a false breakout the other day, really bombed out when the market sold down about 1,000 points or 1,500 points. I think it was down 1,500 points actually, and then we finally worked right back above that level. Like I said, I still think we need to see us get above this horizontal, what am I doing? Sorry about that, that's a bad line. Get above this horizontal resistance level, which is up here closer to 78. We can get above that, then I think that this thing can really get off to the races. It's lagged so badly, its counterparts in gold. I actually think that it's got a bit of a shot. It could have a bit of a shot in the arm from the lower oil price because of the fact that we're going to see probably more higher emission vehicles sold this year. It's going to have higher demand for palladium and platinum, therefore obviously potentially boosting the demand for what this thing supplies. So just keep that in mind. And then the last one I wanted to have a look at is Growth Point. Growth Point's breaking out here. This is one of the things when I when I was on the holiday and I came back, I was talking to some of the guys about this sort of stock. I was saying, I think this year some of these things could have a run here in the beginning of the year, specifically because of the fact that we've had such a swing in the outlook for interest rates here locally. So we only about a month and a half ago, we were looking at as high as 8.5 on the 10-year yield, South African yield. We're down at 740. That's happened so fast, and we were looking at interest rate hikes only the other day, and I think that we're not looking at interest rate hikes anymore. In fact, if we stay in this global deflationary environment, we could very quickly move to interest rate cuts. So just, it's just something to think about. I wouldn't be surprised if, we had these things continue and some of these real interest rate sensitive stocks also continue to the upside in the near term. And that's it for today, guys. Good luck out there.